Ladies and gentlemen, good day and welcome to Vardhman Special Steels Limited Q3FY25 post-result earnings conference call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shailesh Raja from Batlivala & Karani Securities India Private Limited. Thank you and over to you.
Good afternoon and thanks to everyone who have logged in to Vardhman Special Steels Limited Q3FY25 earnings conference call. Now let me introduce you the management participating with us in today's earnings call. We have with us Mr. Sachit Jain, Vice Chairman and Managing Director, Mr. Sanjeev Singla, CFO, Mr. Rajendra Kumar, Executive Director, and Ms. Sonam, Company Secretary. I would now like to turn the call to Mr. Sachit Jain for the opening remarks, followed by Q&A. Over to you, sir.
Yeah. Thank you so much. Ladies and gentlemen, good afternoon and thank you so much for attending our call. We've had an interesting quarter and interesting 9 months so far. As we've shared with you that we have a big 2 projects coming up, that there have been shutdowns for that and inventory build up for the forthcoming shutdown in March second half and part of April. So the 2 projects that we are talking about are COX block that we're putting up, which is a sizing block meant for giving precise sizes for customers, as well as the new reheating furnace, which both of these together will help enhancing our capacity of our rolling to 300,000 tons input, as well as improving the quality and reducing some costs. So a combination of all 3 would happen. The questions that were coming in earlier for us was where is the runway for growth, because we had a capacity limitation and we were testing our melting capacity continuously. And I'm happy to report that in the month of December, we have tested making 25,000 tons for the whole month, which means that now we have tested, albeit only for 1 month, but a run rate of 300,000 tons for the full year. So which means for next 3 to 4 years, the growth path is clear. We will be able to declare a capacity of 3 lakh tons of melting and 270,000 tons of rolling by the end of the next financial year. So we have a runway for growth up to 270,000 tons. And then, of course, we will have possibility of some outsourcing and so on. Apart from that, the market conditions have been pretty tough, and there is pricing pressure, and all of us are facing that pressure. There are 2 reasons for that pressure. One is on the demand side. After the very good growth last year, this year growth in cars have been also much lower. Commercial vehicles and tractors. So nothing is very exciting and the mood is not great in the markets overall. Now that puts more pressure on the bigger companies to try to undercut and sell more. The second reason is imports from China of not for our products too much, but HRCs and commodity products. But that reduces the steel prices and spoils the sentiments in the market, which gives a leverage to the OEs to drive a harder bargain than what is warranted. And therefore, the price reductions which happened, in our belief, have happened a bit more than what were warranted, which has led to lower margins and lower profits than what we were anticipating. However, the profits that we have are still within our stated range. So we are still within the range of 7,000 to 10,000 rupees EBITDA per ton, but definitely lower than what we were anticipating. part of the lower margins have been offset by improvement in our operating parameters. And as we test at a higher level of production, our other costs also, some of the semi-variable costs also go down. Fixed costs get absorbed better. So all that leads us to a confidence that the times coming ahead, we are standing on a good wicket. Couple of other things before I ask Mr. Singla to talk about the results of this quarter. The solar plant is coming up well. In all probabilities, it should be ready by March end or latest in April. So more or less next year, we should get almost the full benefit of this plant. The second thing is there is an inventory build-up in the company that is for the shutdown coming in March end. So after that shutdown, the finished goods inventory should come down to a reasonable level. And of course, after the Cox block installation, our attempt will be to bring down the inventory levels even further. The other interesting thing is there was a news in the market which came out from the Chief Minister of Punjab's office about our new plant. So we are not yet ready to announce the new plant, but yes, plans are being made for the new plant. In all probabilities, the major planning on the gross level will be done by April, and we should get ready to announce the contours of this plan. And hopefully, if the board approves in the April board meeting, we should be able to announce. We are looking for land in Punjab, so the new plant is going to come up in Punjab, hopefully in Ludhiana district itself. We're in the last stages of negotiations for some land. The third thing I wanted to bring to your notice is plans for forging also. More talks have started happening. I have a strong feeling that within the next year or two, these plans will get concretized and we should start taking some concrete steps on the forging journey. The other issue which we have said and people have asked us questions in the past is, what about capital, equity, infusion and stakes and so on. So again, talks are going on, have been going on with IG for some time, and it is part of the plan. At some stage, they will increase their stake. And my feeling is with the announcement of the new project in the next year or two, even that possibility of their increasing the stake is looking brighter than. I mean, it was always on the cards, but timing looks to be now, maybe the next year or two, this may happen. Once this happens, in all probabilities, the promoters also would then put in more money in the company to see that the stake doesn't get diluted too much. It will get diluted, of course, whenever if IG increases the stake, but there probably would be an equity infusion from the promoter side also. So this will all go towards the capex for the new plant. So first the new plant has to be announced, the contours have to be announced, and then later all these other things will follow after that. That's all for the opening remarks. I'll ask Mr. Singla to quickly take you through some numbers and then we are open for Q&A.
Thank you, sir. Good afternoon, everyone. On financial numbers, this quarter we have been able to achieve 52,600 tons of rolled sales, which is higher by 7.5% over the last year. In terms of value, it is 426 crores of total revenue. It is higher by 7.39%. Mainly because, as Satish sir has already explained, that we have to give higher price decrease than what was warranted. So total revenue in terms of rupees, it is higher by 7.5%, whereas in terms of volume, it is 13.5%. EBITDA per ton is 8,000 rupees per ton in this quarter. And for the 9 months, our total volume is 162,000 tons, which is higher by 13.5%, and in terms of value, it is higher by 9.5%. EBITDA per ton for the 9 months as a whole is 8,500 rupees, well within our stated range. And as a result, our PAT for the 9 months is 73 crores, as against 58 crores of 9 months in the last year, higher by 25%. So that's all from on the financial numbers. Now I request further question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Gargi from Value Investment. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question was, you mentioned that in this quarter there was a muted demand scenario, in the press release as well as in your opening remarks. So if you can highlight, sir, what is the user industry mix for us in 9 months FY25, and how is this as compared to last year?
Sorry, can you repeat the last part? I didn't understand. After the muted demand, you said 9 months you asked the question. I couldn't hear you clearly. Can you repeat that?
Yes, sir, sure. So what is the user industry mix in 9 months FY25 as compared to the same period?
We don't share. It's marginally different. The tractor and commercial vehicle segment would be a bit higher than marginally higher, and some non-automotive sales also would be a bit higher.
Okay, sir. So secondly,
but these are all marginal differences. It's not something very major, and that kind of shift can easily happen year to year, quarter to quarter. Some order matures here and there, because we have strategic customers and we have certain volume always of non-strategic customers. So there the volumes will fluctuate a bit here and there.
Okay. The second question is, previous year you had guided for 215 to 220 metric tons of volumes for FY25. So given the volumes that we have done, the balance for 4Q comes to 48,000 tons. So considering that we have almost 1 month of shutdown next quarter, so are we still in line with the guidance, or?
Yes, we are in line. When we made the guidance, we knew there was a shutdown coming, and we have planned inventories with us. So, which is why if you see, we analyze the balance sheet, you'll see working capital significantly higher than our norms. So we believe that yes, around that figure, exact figure is difficult to predict, but around that figure is where we should end up.
All right, sir. And the third question was on the power and fuel cost. So that has gone up by around 1.2 rupees per kg. So this is despite the fuel shifting sourcing needs from GAIL and also solar power. So what led to this?
No, per ton figures haven't gone up. They've gone down actually. The per ton figures. So maybe separately offline we can send an email and we'll answer your concern. But the cost of power and fuel has gone down per ton.
Okay.
Okay.
So, out of the 47 crores power and fuel that is reported.
So you see, the sales are higher, our production is higher than our sales. So the consumption is more on the production, not on the sales.
If you will consider the increase in inventory of 53 crores in the revenue, because in this quarter production was higher, but the sales were lower, so the inventory has gone into stock. So percentage to the total sales and stocks, our power and fuel cost has come down.
Okay. Understood, sir. So out of generally out of this 47 crores power and fuel it mentioned. So how much would be power and how much would be fuel on a general basis, if you can give a breakup, sir?
Out of this, about 38 crore is the power.
Okay. And in power, sir, so I think you mentioned in the opening remarks.
Can you allow another question to come in and then we can come back? And these are very, very detailed questions on numbers. You can send an email to the company and we can answer that separately. Okay?
Okay, sir. Thanks.
Thank you.
Line items we don't normally address in a call. That can be sent separate to the company.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. The next question is from the line of Anil Kumar Sharma, an individual investor. Please go ahead.
Good afternoon, sir. Thanks for the good numbers reported. So my question is, we have earlier discussed that we will announce we have clarified, but return on capital employed, the target we have taking 20-25%. Is that still there?
So first of all, thank you for calling these numbers good. We internally are not very happy with the numbers, but thank you. And yes, we stick with the return on capital employed figures of EBITDA on capital employed of 20% and the target of 25%. We stand by that. I mean, this year end maybe marginally a bit lower, or I don't look at the numbers on an exact number, because at the end level, what is this inventory? Because we have the inventory that we have, as I said, is high, and a lot of inventory is made in anticipation. So making inventory 4 months, 5 months in advance, there could be a little bit off chance of some items becoming little extra, which will get sold in the next quarter. But so this quarter, that may be an issue, but from next year end onwards, we'll be back on track from 20% to 25%. Even this year, we should be in around 20%.
Thank you, sir. And sir, my second question is regarding after this installation of the solar project, how much our power costs in percentage or in we can be reduced? What is the according to us?
We have not shared those numbers just now. So, and roughly power would be around 40 to 45% of our power will become solar. Roughly 40 to 45%.
40 to 45%. Yes.
All right.
So we haven't shared any details just now.
All right. Oh, thank you.
But suffice it to say, there will be a cost reduction. So next year we have 2 items which will be helping to improve our margins. One is power costs are going to come down because of the solar power. And 2, you would have seen noticed an item of job work. So a lot of outside rolling is going on because of shutdowns and so on. So with the shutdowns over, and second, with the increased capacity, there will be no need for, there will not be any need for such major outsourced rolling. So those figures will come down in the second half of next year. So solar project will get the full impact in the full year itself. And the outsourced job work part will come down substantially in the second half. So these are the 2 positives which will happen next year.
All right, sir. Thank you. Thanks a lot.
Thank you. Before we take the next question,
And those positives, as I said, Sorry, may I just add to that? So these two positives are in addition to the positives of quality improvement and better servicing to customers, and the capacity increasing and therefore some costs coming down, which has to be seen.
Thank you, sir. Before we take the next question, we'd like to remind participants to press star and one to ask a question. Next question is from the line of Kirtan Mehta from Baroda BNP Paribas Mutual Fund. Please go ahead.
Thank you, sir, for this opportunity.
Kirtan, can you use your handset mode? Your line is not very clear.
Is this better now?
Yes, please go ahead.
Yes, it is better.
After we are completing a sort of the capacity expansion to 270 KT rolling capacity, how do we expect the volume growth to come through, and how much years of growth runway that this capacity expansion provides us?
We are still making those forecasts, but assuming 215,000 tons we do this year, next 3-4 years growth is visible to us.
So basically,
we should be able to hit 270,000 tons in 3 to 4 years from now.
Understood, sir. And in terms of what is the present cost of your power in unit cost terms, is it close to 7 rupees or so?
Yes, it's around 7. But that is including fixed and variable. The variable cost is lower. So the fixed cost will remain what it is. The variable cost, only that part will be saved with the solar plant coming in. So you should look at a cost of 5 rupees 65 paisa as a variable cost, and compare any saving from solar will be on that 5 rupees 65 paisa, not on the 7 rupees.
Understood. And this would be entirely on our books, the solar plant?
I'm sorry, no. The power plant is putting up in an SPV. Only our share of the equity, 26% of the equity, which is roughly 18 crores. I'm sorry, my CFO has corrected me. 19 crores. So about 19 crores would be on our books. Everything else, including debt obligation, everything else is on the books of the operator.
And what would be then this group captive plant would charge us in terms of the solar power cost?
We haven't shared those figures.
Would it be in the lines of the industry where the cost is typically under 2 rupees 50 paisa or so?
I think your figures are way off. 2 rupees 50 paisa maybe for government norms for supply, and so there is a cost of supplying to the grid, and then on top of that there are wheeling charges, there are transmission and distribution losses, there are banking costs, so there are other costs also. But 2 rupees 50 paisa kind of a thing is for a government kind of bidding, and super large projects where land is very often provided by the government. So please don't compare with those kind of things. This will be in the range of the power input to the grid will be in the range of 3 to 4 rupees, in that range.
Right, sir. Thanks for sharing these details.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. Next question is from the line of Angad Kaddare from Samiksha Capital. Please go ahead.
Thank you for the opportunity.
Angad, can you use your handset mode, please?
Am I audible now?
Yes.
Yes.
Yeah. Thank you. Sir, my first question is on the, the government, I think, has announced another PLI scheme for specialty steel. How do you see the benefits, and
we haven't examined that scheme. We haven't examined that scheme, so I can't answer that question.
Are we planning? Are we interested in it?
No, we are not planning. We are not. We are approved in the PLI 1 scheme.
Yeah. Okay. Sir, my second question
our new
is on
project. And the new project, when it comes up, so first you have to have a detailed project plan before you apply. So we will hope that a PLI 3 scheme will come in, and if it comes in, we will apply for it.
Noted. Sir, my second question is on green steel. So government has come up with the definition of 2.2 CO2 per ton.
Yes.
We are already
Correct.
at 0.73 and, further planning to go down to 0.4. I just want to understand the unit economics, how we will be benefited from green steel. Like, let's say if we manufacture 2 lakh tons of, if we produce 2 lakh tons, how will we get benefited from this green steel definition and even the carbon credit?
So, all those things are getting clarified as we speak. So, the financial benefit will come once carbon trading begins in the country. And the government is serious about carbon trading, and people like us with 0.45 or 0.48 is where we should end up. Maybe within May we'll be at 0.45 or so. So we'll be way lower than the norms, and therefore whenever carbon trading begins, we will be beneficiaries. So, but very difficult to find out what is the financial impact of that. Suffice it to say, it will be a positive impact, and all our competitors will be significantly above 2.2. So the relative advantage we will have over our competitors would be positive for us. The second thing is in terms of share of business. So clearly we are getting signals from OEs that they want to move to lower carbon credit companies, which means that chances of increasing our share with the target customers is going to increase. And at some stage, there will be a shortage in the country of low carbon footprint companies. In which case, if the government mandates come in terms of so much everybody has to use from low carbon credit companies, then there will be a premium for our steels. But all this is speculation and conjecture at this point in time. Suffice it to say that the tailwinds are in our favor. We are facing tailwinds favoring us, not headwinds ahead of us. So all this thing is moving in our favor, and we are getting ready with a new plant also. Hopefully by the time all these things concretize, we'll have a new plant also up. We will have sufficient capacity to take full advantage of it. The European customers that are talking to us are coming to us primarily because of this. So that is a very clear thing we're getting from Europe.
Got it, sir. Sir,
I'm sorry for being very vague, but I'm sorry for being so vague, but as of now, it's all talk. And but the seriousness of those talks that I'm seeing in some of the OEs is very, very heartening. So if to answer your question, is there some specific benefit we have seen so far? I guess only the European large OEs, the inquiry that came to us and whose samples we have sent, and I'm going to meet them later this year. That inquiry came only because of low carbon credit. They were very clear. That's the only reason they approached us. And they have never sourced from India. And they are huge. So if that happens, and if other large European OEs follow suit, then we are sitting pretty.
So, sir, suffice to say the 25% export target is on track.
Difficult to say, because some of it could be export of steel, some of it they may say, no, we will take the forgings from India, so they may ask us to supply the steel to forging companies. So these are global supply chains, so very difficult to say whether steel will be exported or they will increase their sourcing of forgings from India.
Got it. Sir, one small clarification. We are planning to do a planned shutdown of 25 days in this quarter. So we have sufficient inventory build up?
So first of all, one it will be partly March and partly April. So it will be partly this quarter, partly next quarter. Second, we have chosen a time where anyway demands are low because everybody is trying to reduce their inventory. So March end is not a time where customers are looking for large amounts of material. So we have chosen that kind of time. And third, we built up sufficient stocks.
Got it. And another small clarification,
And sorry, let me repeat. May I just complete this? The outsourced rolling mills that we are doing, we are getting some work done on outsourcing. That will continue. So there will be. It's not that we'll be in a complete shutdown. It will be partial shutdown of capacity.
Got it. Sir, another small clarification on the upcoming forging and the action plan. Both we are going ahead with Aichi, or is another entity, or are we going to stand?
One thing about Vardhman is when we partner with somebody, then we go the whole hog with them. And Aichi is the world's third largest forging company and one of the best in quality. So when you have such a partner, your partner has all that, why would you go outside?
Thank you.
They have forging plants all over the world. Their mother plant is in Japan. They have a forging company in Indonesia. They have a forging company in Thailand, in Philippines, and the US. India is the missing part in their plan. And India, when it comes up, will be meant for Indian market, will be meant for Africa in the future, and will be meant to export to Europe in the future.
Got it, sir. Thank you. I'll get back in the queue.
Thank you.
And sorry, they are also in China. I forgot to add, they are also in China.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. Next question is from the line of Aniket Redkar, an individual investor. Please go ahead.
Good afternoon, everyone, and thank you for the opportunity. Hello, am I audible?
Yeah, go ahead. Yes,
sir, just wanted to understand, are we looking for any export opportunity in terms of, from the long-term perspective or the short-term perspective?
Of course.
Hello?
Yes, we are. Yeah, I said of course we are. If you want to be a world-class company, you can't be a domestic company alone. You have to be exporting. So yes, for sure we're looking for export opportunity.
And sir, related to this Aichi, are we supplying products directly to Toyota or through Aichi?
No. Toyota is a car company. They don't buy steel. They buy, in some cases they buy forged components, forged and machined components, and some they will buy assemblies. So steel company would be a tier 2 or a tier 3 supplier. But we are approved by Toyota, so only then can you supply to Toyota. So the audits are done by Toyota and they approve our plant for certain grades of steel, for certain products we send to certain customers.
Okay.
They specify all that.
So, sir, can you give
sorry, Aichi supplies roughly 70% of Toyota's requirements of steel globally.
Okay.
And therefore, with the announcement of Toyota's new plant and expansion in India, this will open up an opportunity for us to supply more volume in India also to Toyota.
Okay. And sir, can you give me the guidance in terms of revenue and the bottom line for FY25 and 26?
FY25 we've already said that with 9 months are out, so 1 quarter is left. We will remain in the range of 7,000 to 10,000 rupees EBITDA per ton in the 4th quarter also. And 25, 26, we had said we will be 8 to 11 we will try to raise the range, we said. That remains to be seen as we close the year because the market conditions have turned adverse. So whether we'll be able to hit that figure next year or the year after that. So 26, 27, we are now reasonably confident we will be able to hit the figure of 8 to 11. But for next year, for now, I will like to retain the forecast of 7 to 10.
Okay. Got it. And sir, one last question. Are we looking for any capex for the upcoming fiscal year?
Yes, this is already part of the announced capex. The rolling mill part will get completed only next year by September. So it will get commissioned, both the Cox block as well as the reheating furnace and some additions in the cooling bed and other things. So roughly 160 crores or 170 crores worth of capex will be capitalized next year. In addition, we will be starting work on the NDT line, the second non-destructive testing line. So that work will start next year and will get commissioned in the year after that.
Okay. Got it, sir. Thank you so much, sir.
Our target we will attempt to see if it gets commissioned within the next year. But after this, after the NDT line is done and some more pending work in the furnace and some environmental investments. So really speaking, 25, 26 will signal the end of the capex plan for as far as this plant is concerned.
Okay.
Largely. Then normal capex kind of a thing will continue, but this plant will be then almost done, I would say.
Okay. Got it, sir. Got it.
Thank you. We'll take our next question from the line of Saket Kapoor from Kapoor Company. Please go ahead. Mr. Saket Kapoor, please check if your line is on mute. Since there is...
Hello?
Yeah, go ahead.
Hello. Yes, sir. Sir, firstly, as you were alluding to the previous participant about the capex for the existing plant to be over by the financial year 2025-26. So already we have our melting capacity has risen to 3 lakh per ton. How much have we spent? How much have we spent on this part of the story, and what part of the capex is left to be spent in absolute amount terms, if you could quantify?
So on the melting side, we have not spent much money. It is more process improvements that have gone in, and a new transformer was put in. There's some pending environmental work, which is again not too major, less than 10 crores kind of a thing, which is pending. So there's not much investment done in the melting. For the rolling side, we have said about 180 crores or something, which is largely two items with 160 crores, and then smaller items here and there would be another maybe 20 crores, 15, 20 crores. And then the NDT line.
Okay.
NDT will not increase capacity. That is required for testing for high quality customers like Toyota and Maruti, for the import substitution, for the more sophisticated customers and sophisticated products, you require that kind of continuous testing for quality reliance, quality assurance.
Okay. So you mentioned LDD line. Can you just provide the full form?
Non-destructive testing. Non-destructive testing.
Okay, NDT line. Sir,
these are continuous lines. These are continuous lines for quality checking, and any defects are immediately pointed out. If you can rectify the defect, you can send the goods. If you can't rectify the goods, then the goods are rejected. Each bar is rejected or approved.
Right.
And sir,
The earlier method is manual checking. The earlier method is manual checking. This is automatic checking by machines.
Correct, sir. Thank you for elaborate answer, sir. Sir, so the quarterly tonnages going ahead with the additional rolling capacity would be to the tune of 70,000 plus for the first quarter going ahead?
Can you repeat the question, please? I'm sorry, I didn't get that.
With the new
The rolling milk capacity first quarter will be less. Because one, we're having a shutdown extending into April, plus the first investment coming up is the COPS block, which will get commissioned in April. That will increase our capacity by about 15,000 tons of input. Then the next investment coming in is the reheating furnace, which will get commissioned by September or October. That will have a bigger chunk of impact on the capacity.
Okay. So, sir, second half, what should be the quarterly run rate for us?
Sorry, let me just elaborate a bit. Plus, after the COPS block gets commissioned, there'll be a few months of stabilization, getting approvals from customers that they are okay in using this pump. Because it's a major change, so the customers have to get satisfied and so on. That whole process begins again, much shorter process than a fresh approval, but still that takes time. So which is why next year we are not looking at a major increase in capacity or so on till December or so, when customers get fully confident, and then maybe only the last quarter we'll get a benefit of capacity.
Okay.
That's why I said next year is a year of more stabilization and consolidation, project implementation and consolidation. And then the year 26, 27, we are ready full blast.
Okay. And
as I said earlier, this whole process got delayed by a year, a little over a year, because of the delays in some capex, some capital deliveries and so on. So the whole process got delayed by a year.
Yes, sir. I got your point. Is that the project implementation got delayed by a year's time, and we have spent around 160 to 180 crore in these all activities. This is what the total capex will be.
Some spent, some invested, some will be invested, but the capitalization will be to that kind of amount, and the entire capitalization will happen in next year.
Okay.
And the year 25-26.
And then from 26-27, the run rate would be what, sir, on a quarterly basis? How will the tonnage go up?
That depends on the sales position, market forecast, and so on. But this year we've done 215,000 tons. Next year we'll try to do 225 to 230, around that. We have not finalized the figures. The year after that, we should try to do 245 to 250, and the year after that, we should try to do 270.
Okay.
So we target a growth of 7 to 8%. We target a growth of about 7 to 8%, which is the rate at which the economy is growing. If there is a scope, things are better, we'll be happy to take that growth. But all that will be discussed in the year 26-27 once capacity problems are behind us.
Correct, sir.
Then you can put a foot on the accelerator, no? Otherwise, if you have capacity shutdowns and so on, you have to be careful. So you can't put the foot on the accelerator.
Sahi baat hai, sir. So for the raw material mix, sir, you were mentioning about once this green aspect comes into full throttle, there will be scarcity part on the same. So what is currently our raw material sourcing strategy, and how much of the scrap goes also in the raw material mix?
Scrap is roughly 80% in our raw material mix. And we have tested that we can go up to almost 100% of scrap also. So that has also been tested, and some customers have liked the idea very much that we can do 100% scrap. As a country, there is a shortage of scrap. However, in the north, we do not face that shortage of scrap. So that is why our second plant also we are looking to locate that plant in Punjab itself. So in our opinion, Punjab is the best state to put up a secondary steel, which is our kind of steel plant. So, and there's a concept of circular economy which is coming in, and already with some OEs we are advanced levels of talks of circular economy, which means scrap generated from the OE will come to the steel company. The steel company will make the steel, send it to vendors of the automobile company, and go back to the auto company. Also, end of life scrap will also come from the OE and come to the steel company. So, for example, Maruti has a joint venture with Toyota Tsusho for scrapping cars. So 100% of that scrap comes to us and goes back to Maruti.
Correct, sir. And this entire
That's still a small quantity.
Yeah.
I'm saying that is still a very small quantity just now. But those concepts are being tested and so on, that as government regulations are clearly coming in this area. So all companies, the OEs are getting ready for this kind of a thing, that once this thing happens, we are the best placed company for implementing the circular economy concept.
Correct. And currently all the
Both from green steel. Sorry, go ahead.
No, sir, you answer, sir. I am there to listen. Please, bully.
So the two concepts of green steel and circular economy, these two are the positive steps which are going in our favor. Green steel will have an advantage in India and overseas, whether for steel or for forged components. Circular economy is a local concept. It will benefit us with the North Indian companies. So whether it's Maruti, whether it's Hero, whether it's the other plants in the northern region. So we have Honda is present. So Bajaj has a plant in the north. And then depending on how seriously the government implements this, even the companies in other parts of the country may want this material from us.
Correct, sir. And sir, there is also another steel company that has started in a small way. I think the Tata Steel has also commissioned their scrap-based EAF route plant in the state of Punjab only. That is complementary.
That is not for automotive steel. No. So first of all, it is not yet commissioned, and two, it is not for automotive steel, to our understanding.
Okay.
Our understanding is it is meant for construction steel.
Correct, sir. Thank you for correcting me. And lastly, sir, when we are talking to the state government...
And again, sorry, I'm saying this is our understanding. Our understanding. It is not right for me to comment on another company.
That's absolutely right, sir. Sir, lastly, sir, when we have an understanding with the government of Punjab going ahead with another greenfield facility, so the type of incentives which we are accruing right now in terms of the benefit and the tax refund and the electricity duty and all, so that will all again be the very likelihood that will be a part of the project going ahead. That incentives. So should be a part going ahead?
That's a reasonable assumption, but till things are finalized, I don't want to comment on that, but that's a reasonable assumption.
Okay, sir. And as of now, sir, we have accrued, I think so, for the 9 months, 22 crores. So what is the total time limit for accruing the benefit? When will this come to end? अभी कितना समय बाकी है और benefit accrued करने के लिए?
I will let Mr. Singla answer that question. I don't have the knowledge to answer that question.
So there are two components. One is GST refund, and GST refund is available to us up to September 26, and electricity duty exemption is available up to September 29.
Okay, sir. और सर ये सालाना कितना हम बुक करेंगे अभी तक हमने 9 महीने में 22 करोड़ बुक किया है अदर इनकम के कैटेगरी में, तो ईयरली नंबर आप बता सकते हैं?
Yes, it will continue in the same proportion.
जो एक्सपेंशन वैसे बढ़ जाएगा कि नहीं आएगा, एंटिटी वगैरह की
अगर सोलर पावर भी आ गया ना, उसपे ड्यूटी भी आएगी,
जीएसटी का तो आएगा,
जीएसटी का वो बढ़ेगा, ये कम होगा. So overall, under both the heads, it is 24-25 crores per annum. So equally distributed under both the heads.
जी सर. और सिंगला साहब, ये तो अदर एक्सपेंसेस कैटेगरी में जो हम इंक्रीज देखते हैं, वो क्या वेरिएबल कॉस्ट के कारण है कि कुछ वन ऑफ आइटम भी है इस क्वार्टर के लिए एट 67 करोड़?
नहीं, वेरिएबल कॉस्ट. It is variable.
There's no one-off big ticket item.
जी सर. अगर एक रिक्वेस्ट है कि सर जो अपने प्रेजेंटेशन और जो प्रेस रिलीज आप देते हैं उसे सर रिजल्ट के उपरांत ही प्रदान मैंने अपलोड कर दें सर. जस्ट कॉन कॉल के 1 घंटा पहले आता है तो हमें पूरा समय नहीं मिल पाता है सर उसको रिव्यू करने के लिए. तो काइंडली लुक टू अपलोड द सेम ऑन द सेम डे सर.
Yes, this time we got late and it is uploaded today morning. So normally we do upload on the same day itself. So next time we will take this point.
ठीक है. धन्यवाद जैन साहब, and please continue to lead the call going ahead. Thanks sir.
Thank you. We'll take our next question from the line of Sai Ganesh from Square 64 Capital Advisors LLP. Please go ahead.
Thank you for the opportunity. I just wanted to know the opportunity size coming from IG to our company.
I'm sorry, can you repeat the opportunity?
Size coming from IG.
Opportunity size in terms of volume, business?
Yes, in volume. Yes.
It is still small. We are below our target of 30,000 tons of exports that was planned, primarily because Toyota sales in Thailand are not taking off as per their expectation, and the yen depreciated significantly over the last 5 years, and we believe in a strong rupee, so relatively Indian costs have become higher than even Japanese costs. So now with the rupee depreciating finally, I think things should change a bit, turn a little bit more in our favor.
Okay, sir. Do we have any internally target for like volume terms from IG going forward 3 to 5 years?
No, we don't work like that. There's a direction towards which we'll move towards, and which is why even IG is cognizant of the fact that we are below those figures of 30,000 tons. So this forging business and all these things are being thought of to see how offtake of steel from Vardhman Steel can be made good.
Okay, sir, and could you share?
But we don't have any such. I'm sorry?
Could you share the EBITDA per ton of IG? Like, is it possible?
No, we don't share separately customer by customer. We talk about overall EBITDA per ton.
Okay. Thank you, sir.
Thank you. We'll take our next question from the line of Gargi from Value Investment. Please go ahead.
Hi, sir. Thank you. So my question was that,
yes.
Many of our peers are unlisted. So is there any capacity addition happening in the next 1 or 2 years? Also, could you talk about the dynamics and... Yes, sir.
So, from what we have heard, Kalyani Group has already come out in public that they're putting up a green steel plant. They have taken over a steel plant in the south, Kamineni Steel. So that is one that we've heard of. SLR is probably thinking of... Baki, it's very difficult for me to comment on other companies, but maybe they are thinking of expanding, but nobody shares their plans with us, no?
Yes, sir. Also, could you talk about the dynamics and the reason for the pricing pressure, which you mentioned in your opening remarks? I wanted to understand whether, as per your opinion, whether this pricing pressure will continue.
So, currently the pressure is, as I said, there are two reasons primarily. One is imports from China, which have depressed the commodity steel prices, which spoils the steel sentiment. And the bigger guys like Tata, JSW, Tata Steel results are out in the public. I believe JSW profits, I heard, are down by 70%, and Tata Steel profits are also down by 36%. Please, this is a figure I heard, so I'm not standing by these figures. But the fact is the profits are down. Sajjan Jindal ji has already come out in public. There was an interview in Times of India talking about this. So steel industry is under pressure, very clearly. Now, if steel industry is under pressure, then the probability that the government will step in at some stage, I think there's pressure from the industry to the government to put in some safeguard duties, anti-dumping duties. All those discussions are going on. Now, when these things will take shape, when will it happen, very difficult for me to say. The second thing which is favoring our company, not directly, but by reducing our competitive disadvantage compared to our competitors with, I believe on this coking coke, there has been some action by the government in terms of dumped coking coke coming into the country, and therefore coking coke prices in the country are expected to rise. With those prices rising, which means our competitors will be forced at some stage to start raising prices. So once that pressure comes in, the relative disadvantage will come up. We are much smaller company, so the bigger companies, their pressure determines the market sentiment. So once JSW and Tata Steel start doing well, there will be tailwinds supporting us to do better than what we are doing today.
Okay, so one last question is that, in the last quarter you mentioned that there is an order win with one large Indian OE for which our company will be the tier 1 supplier. So that is on account of OE replacing the Japanese steel imports. So when do we expect to start supplies to these OEs, and also
within a year? Within a year, the supplies will start.
Okay, sir. Any progress on similar negotiations with other OEs?
Yes, there is. So because the government is very clear that everywhere where steel is getting imported, to see that steel gets localized. So certain things have already happened, where we are tier 2 suppliers. So some orders which were going from which imports were coming in from Korea have already shifted to us, and some more. But largely, steel had already been localized except for this OE. And this opportunity is a big opportunity for us, provided we are able to make success out of this. Now, please understand, they'll be comparing, this OE will compare our steel with Japanese steel directly. A tier 1 comparing Japanese steel and an OE comparing Japanese steel is a big difference. So it's a challenge and an opportunity for us.
Understood, sir. Thank you, and all the best to you.
Thank you.
Thank you.
Ladies and gentlemen, since we are at time, we will take that as the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Ladies and gentlemen, thank you so much. Some of your comments have been encouraging. As I said earlier, we are not very happy with this performance. And we hope once this plant or this expansion gets stabilized, we'll be able to focus on more improvements and very soon reach our figure of 8 to 11,000 guidance. And we're able to show you a clearer path of growth. April meeting, as I said, we'll hopefully announce our new project also. The timelines for the new project also will be announced. So a lot of things will become clearer in the next 3 to 6 months. Thank you so much, and we look forward for your continued interest in our company.
Thank you, sir. On behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.